Hi, welcome back to Brandy Tells Her Business. I'm a hotelier and I love sharing my business with all of you. So today I wanted to go into how to buy your first hotel. There are a lot of different ways to get into a hotel, and I know it's a very intimidating concept. Hotels can be very expensive. Hotels can cost um, tens of millions of dollars. But did you know that you can buy a motel or a hotel for less than you can buy a single family residence? Like those deals actually exist. My first motel I bought for under $350,000. So I'm a Californian, and if you know anything about California, our real estate can be pretty pricey. Um, Obviously, there are some cheap areas in the state, primarily in the desert, where you can find things more affordably, but for the most part, our real estate market is pretty out of control. But I was able to buy a motel cheaper than I could find a family residence. Like in the area where I live, like if a three-bedroom home, you're going to spend at least $800,000 to maybe even well over $1 million. So to find a a, a commercial property um, less than $350,000, like it's pretty incredible. So my first motel actually comes with 3 apartment units and then 12 motel rooms. So just imagine that for a second. Okay. You get 3 apartments, which you can utilize to live in yourself or put a manager in. You could put a manager in and a maid in, or you can just rent them out as apartments or rent them out as really nice and comfortable um, motel rooms. It's up to you. Do what you want. And then you have 12 additional rooms on top of that for daily and weekly rentals to the public. Like, that's incredible. Like, you essentially have a house that is making you money. And so that is why I'm such a proponent of people getting into their own motels and hotels. So, first of all, let's talk about the difference between a motel and a hotel in case anyone doesn't know. So, the difference between the two is a motel uh, is simply accessible on the outside, and they have a tendency to be smaller than hotels. But the customer accesses their room from the outside, meaning they drive up, they park in front of the room, and they walk right in. A hotel is accessible on the inside, so customers park their car, they go inside a big building, and then they walk up to their room. So that is the difference between the two. One is not necessarily better than the other or more profitable than the other, but there's kind of like a stigma attached to motels because they have a tendency to have cheaper daily rent, and certain populations of people will actually utilize a motel versus the typical leisure traveler or business traveler. But there are exceptions. So my motel is located in an area of that attracts a lot of tourists, and the accommodations in that particular town, they're all motels. So there another option that you would have as a traveler is to maybe get an Airbnb, but if you wanted to save money, or you just came off the road and you're looking for a place to stay, there's not a lot of other options. Another draw to my area is we have a lot of work around that particular area that attracts people that work in oil and gas and wind farms and things of that nature, who are on contract, who might come into town or nearby towns for a week or two or three. They often don't know how long they're going to be there. So it's not worth investing in an apartment because they don't know how long their contract is going to be. So anyway, kind of went off on a tangent there. But so those are the difference between hotels and motels. Hotels and motels can range vastly in price. So you can find something for under 200,000, or you can find something for 26 million. So it runs the gamut. as far as price points, which is great for you because you can find something in your price range. I always would advise you to start off small. And when I say small, I mean 20 rooms or less. And this is just going to help you kind of get your feet wet, learn the business, understand the business. And when you understand the business, then you're able to then go up to bigger and bigger properties because you know what you're looking for before investing in a hotel. No one can woo you with the idea of making $500,000 a year and selling it for 1.5 million because you understand that their occupancy rate is actually really low and their expenses are really high, and that they may make a gross of $500,000 a year, but the actual owner is only taking home $60,000 a year for his own personal income. That's all that's left. For example, I see deals like that all the time. Hotels are not necessarily more profitable than motels. It depends on the deal and it depends on how much you pay. So, how do you get into your first hotel property? And I'm using hotel and motel interchangeably. So, I'm just going to say hotel, but it could be motel as well. So, one way, obviously, is to go through a bank, getting a commercial loan. Here are the challenges, however, for commercial loans, for especially motels. They don't like to lend on them. They are going to scrutinize the financials. So the last 2-3 years of tax returns, they're going to require, because it's a business, they want to know, what does this business make? The problem that we often face is that many motels and smaller hotels are owned by families who have been trying to figure out ways to not pay all of their taxes. So they haven't reported all of the cash receipts, for example. And so their gross income is lower than maybe it actually is, right? So they may, for example, be selling this particular property for 900,000, but their taxes show that it only made 60,000 a year. They're telling you, hey, it makes 150. We get a lot of cash transactions. But so what? So what they're telling you? They can't prove it. It's great for you for negotiations. Like, hey, you can't prove that this made 50,000 more a year, you know, based on what you're showing me, that your tax filings, 60,000 times 3 to 4 times multiplier. That's, like maybe 240,000. Like, I'm willing to give you 300,000 for this property, not 800,000. Nobody would be able to get a loan for 800,000 based on their financial receipts. Okay, so the only option they have is to work with you and negotiate with you, or to wait for somebody who just really wants that property to come in and pay cash. That's rare. And if it's been for sale for a while, they understand that that's a rare opportunity. So they're more likely to work with you and negotiate with you. So for my particular first motel, the seller hadn't filed taxes in years. So there's no way for me to get a traditional loan, even though the property was really cheap. There was just no way for me to get a traditional loan. She had to offer seller financing. And so we set up terms that worked for her and I. And seller financing is a great opportunity because seller financing can look like anything. Often, seller financing, they require anywhere from 20% to 50% down. Then you will make mortgage payments to them every single month at a certain interest rate. When I bought my property, interest rates were significantly higher, but because it's seller financing, they can make up their own terms. So I think my interest rate is like 2%. It's like nothing. So seller financing has the advantage of allowing you to put less down. You can negotiate for that. Um, their interest rates does not have to be market rate. Our market rate, I think, right now is like 8% or something for a commercial loan. They can offer you a 2% interest rate. You can negotiate for that. I want 2%, or I'm walking. Um, so seller financing is the easiest way for you to get into your first hotel. Another opportunity, obviously, is to partner with other people. If you're going to do a partnership, you need to make sure that there is enough income coming in to make it worthwhile for everyone involved. I've seen, and I love to see Black people entering into the space, because if you didn't know anything about hospitality, it's there are a lot of non-Black people in this space who own these properties. A lot of them are actually Indian families, and I don't know what the percentage is, but there's a historical reason behind why there's so many Indian families that own motels in the U.S. And there's a whole story and history behind it. It's really interesting. But less than 1% of hotels are owned by African Americans. I think it's a percentage of 1%, actually. So I get so excited to see African Americans entering into the space. Uh, but I've seen, you know, people partner up. Recently, I came across this group of African American investors. I think there was like six of them, and they partnered up to buy this. Um, I think it was a motel, but it looked like it was pretty big. Like maybe it had between like 30 and 50 rooms. I couldn't tell. Um, my advice when you're partnering up is that you've really got to generate a lot of income in order to ensure that when you all are splitting that money six ways, that is worthwhile. Because otherwise, some of you are going to be frustrated. So, how do you make sure that there's enough income? So, you can look at financials, how the property has historically performed. If you don't have financials like I did not have, I had to look at worst case scenarios. So I would say worst case scenarios is you have an occupancy of 30%. I think the average occupancy for a decently run motel is probably about 60%. Your target occupancy is 80%. So you have 10 rooms. If 30% of those rooms are occupied on any given night, and let's just say you're getting $100 a night, which is maybe a little on the high side, but we're just using that for an example. On any given night, you would make $300, right? $300 times 30 days in a month, that would be 3,000. Can your motel survive if you only made 3,000? Could you pay all of your bills, your mortgage, your housekeeping, um, and survive? Worst case scenario. So that's what you want to look at. Like I said, occupancy can vary greatly. You really need to understand that, and before you even make an offer, go stay at the motel or hotel that you're interested in, and see if there's traffic. See if there are other guests there. See for yourself, especially on a Friday and Saturday night. There should be other people there. Um, so understanding worst case scenario, if you can afford this hotel. Don't assume because a hotel is big and it has a brand name on it that it's doing well. There's, brand name hotels in suburbs that I've looked at with probably 50, 60 rooms that have 30% occupancy. And they have a whole lot of expenses. They have a front desk person that they need to have 24/7. They have, housekeeping staff. They need to have a general manager. They have a kitchen, so they have people who work in the kitchen. They have a lot of expenses. I don't think that particular hotel is doing that great. Often hotels like that are where billionaires invest in to kind of hide their money. They're not concerned about making a lot of money. They just want the real estate in their portfolio. So those are not deals for you and me because we're trying to make money. We're trying to build. We're not there yet, right? So we've talked about traditional bank loans and the challenges of that, seller financing and the advantages of that, and then of course partnering up to get seller financing or to get that traditional commercial bank loan. Now, so what are some challenges when it comes to buying your motel? Beyond that, what if you have bad credit? What if you? I'm sorry, distracted. What if you have bad credit? How would you go about purchasing a motel? Seller financing. No one ever asked to see my credit when I was getting into my first deal. It wasn't required. What she required was a certain amount down and a commitment to pay a certain amount a month, and then the rest of what was owed after a 5-year term. I committed to that. So you can't do this with bad credit. What if you don't have any money? There are a lot of businesses, not just hotels, but businesses owned by boomers that are retiring. For my first deal, um, this particular seller, she had been trying to sell for years. And she had had people who were interested, but she was asking way too much and she wasn't willing to negotiate. By the time I came to the table, the price had been lowered, 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 and she was more willing to negotiate because she was ailing. She had an illness. She just couldn't do it anymore. There are a lot of people in that position. There was no one for her to leave it to, no child who wanted to take over for her. So a lot of boomers are in the position where they need to sell or they want to sell. They want to move on with their life. Let's just say that you didn't have a dime, but you had passion and you wanted to come in and say, hey, let me take over ownership, but I don't have any money. So let's just do a split. Let's do a split of revenue per month. So you're getting a really nice, you continue to get a really nice check every single month. And then I can build sweat equity, basically. And I'll file taxes, every year on this property that I now own. And then I'll be able to get a traditional loan or have saved up enough money to cash you out of the deal at the end of a certain term. Maybe it's 5 years. And if you don't, well, the seller can come back in and reclaim that property. So it's really not a loss for them. Those are opportunities. So don't think because you don't have millions of dollars, you don't have hundreds of thousands of dollars to put down, your credit is bad, that you can't own a business like a hotel. You absolutely can. And if you have any questions, please ask below. And remember, a lot of these deals are cheaper than single family homes. So a single family home is really that you live in is a liability. And a hotel is a business that typically comes with a single family home attached for the manager or owner to live in. So it's a win-win. It really is a good business model. There's a lot of factors that play into how well your property is going to do, and we'll discuss that. Thank you so much. And please let me know if you have any questions. Later now.